All right, how is everybody doing? Cobra Trading. I have not done a video in quite some time, so I'm going to do a quick Bitcoin update. I'm actually going to be going to the beach. I've been very busy trying to get everything ready. I'm just going to give a midweek Bitcoin update and also go over the heat map and what the heat map is telling us now that we've broken into a new range. We've finally broken above this range, right? We were looking to break highs at about 97, 9,800 and you know, just between 97 and 10K. We broke above that. Our next resistance was going to be about 10,500. We needed a daily close above there. We got it. Now we've got these two extremely strong weekly candles. Obviously, there's still some time before this one has ended, but we are starting to test resistances up in this level over here. So this is going to be our next major resistance test, which is about 11,500. And I'm really looking forward to that. So that's going to be a really big deal for us. So let's come down to the daily chart real quick, right? So in some of my last videos, I had this count. This is some of the smaller interval counts are on the lower time frames, but this was my overall like long-term count for, you know, since our all-time high here at $20,000, right? That I was saying that we were in a massive triangle and that this was just a giant A, B, C, D, E. And this is why my targets for the longest time after we had this first initial pump was that we were going to be coming down to, you know, around that $7,000, $7,200 level if, you know, like 8,000 broke. 8,000 never broke. We tested this one time. And then after that, we really only tested like 86 or 8,800 again. And now we've had a start of this new impulse. So this is a really good sign. You know, we've broken out of this triangle, which is absolutely phenomenal. And all of our indicators on the daily chart are definitely looking bullish, right? Like we've definitely broken out from the main area here of just staying stagnant for so long. If we take a look at Ichimoku here, I'll go over that real quick. We were using this as heavy support for quite some time. On our daily chart, we were using the cloud as heavy support here. And my fear was that if we ended up getting closes inside this cloud, that we were going to first come down and test our 200 EMA. I said this in my last video, that if this broke and we got daily closes into the cloud, that we were going to come down and start testing 8,700 at our 200 EMA, since we have not retested that since we broke above it. Now, breaking above the 200 EMA on the daily chart and not testing it again yet is totally fine. We've only really just had our golden cross here back in April or in May, excuse me. And we've been chugging along really well since then, with the exception of all of this sideways fuckery here. And once we got that closed above the 50 EMA, I said, okay, well, this is good. I mean, at least there's some strong volume coming into the market. Let's see what happens, because our MACD at that point had not, both of these lines had not crossed into bullish territory yet. And this is what I was really waiting for. So on this next candle, we opened on the 22nd and we did get a close above our Kijun-sen line. And I said, okay, well, one of our MACD lines is in bullish territory. What about the next one? So with this next candle, we did get that confirmation. Entering on a pullback here probably would have been the move on the daily chart at 9,500. And that would have been some really sick gains on this pump here. So that's pretty much what's going on the daily chart. I think that it's really kind of interesting how well specifically this trend line starting from here and connecting to here, how perfectly that acted as resistance. We literally just poked it like to the dollar here. I don't think that we're going to break through this trend line on the first try. This is where right here, and I said this, I think maybe a week or two ago, that this area right here where these two trend lines were converging was going to be major resistance. And it acted as that all through you know, June and July. We finally broke through that, got a close, and had even more volume coming into the market once we, you know, started climbing up above 10K. Once we broke 10K, more buyers came into the market. Breakout sellers were buying the break of 10,500, and we just rocked it up. There was a lot of shorts that ended up getting liquidated, and we're still moving up pretty significantly on the weekly chart here. Another very important trend line is this level dating all the way back from 2019 in October. If you draw a trend line right across, this is where I was getting just a little bit worried yesterday when we kept going up, was because at first, before we had this last massive push for a candle, we were just kind of testing this line again here. And what I noticed is that we haven't been able to break through this for a very long time. This little zone here between 10,540 and I guess 10,400, this little like $150 range here. We haven't been able to break above that since October 2019. We're getting this pin bar here, right? We got this pin bar to the downside, and that's actually a good sign. To me, that's extremely bullish here on the daily chart. Every time that the bears have tried to push it down, there's been massive demand here. Massive demand. Everyone knows that Bitcoin finally took off. It's not moving sideways anymore. It's potentially the start of another impulse, and everyone's looking to buy dips right now. Everyone's looking to be buying the dip and to be riding it the rest of the way up, which I think is a pretty good assumption, right? Stop freaking out, all right? I mean, we just had a huge rip for like the last 2 weeks, okay? Like, yeah, it's going to need to cool off. Yes, these indicators are going to need to cool off. I mean, look at the RSI here on this 4-hour chart. I mean, it looks ridiculous. What I'm expecting to happen is these indicators to cool off just a little bit, retest that known 56 level on the RSI before we rocket off again, and maybe even potentially tap our 2020 yearly high again. I do expect this level to be tested again. We did test it pretty much right here. I mean, what, it was like a couple dollars off, like $20 off or something. So, that might be the only retest we have, but somehow I kind of doubt that. On this move up from our low to our high here, if we take Fibonacci into account, from our low to our high, our 618 would be basically $10,000, and our 382, which is known for getting tapped on huge impulses like this on higher time frames, is right at 10,530 basically. So right at that 2020 yearly high. So this might be the only retest that we have from that, and that's totally fine. We could totally move up from here, but in my opinion, this really just looks like a massive bull flag to me. With all of that said, let me go ahead and switch over to the trading light charts, right? So let's go over here real quick. I haven't done any trading light update in quite some time. So now that we're in a new range, let's go ahead and see where these liquidity pools are, right? So right now I'm on tradinglight.com. Link is in the description below if you're interested in this website. By the way, I highly recommend it. It's very good. If you check out my trading light tutorial video, I go in and explain not only the entire platform, but also how you can use the information that these heat maps give you to kind of be more strategic with where you're placing your stop losses and your buy orders and stuff like that. If you look at the 1-hour chart, this was pretty much a swing failure pattern to just liquidate, over leveraged positions in both directions. So we wicked up. We took out a lot of shorts. We wicked down. We took out a lot of longs that longed, 100x, this candle in here, and we took all those out as well. And then we kind of leveled off and then started slow grinding down. So what we see is that we had this one liquidity pool down here. We had a lot of people waiting to buy down here, and that's why we got this big wick here. And then we start coming back up. We start gaining support, liquidating shorts more. And then the bulls kind of got exhausted here on the way back up to try and recover and make another higher high. So now we're reversing and coming back down. So now the question is, with the open interest, we've got the open interest kind of leveling off here. Obviously, it was going up. Everyone was longing. And then this was, liquidations in here. Some people got taken out. And then this, when you see the price going down like this and you see open interest going up, that means that people are laddering in their long positions here. People are slowly buying in. And that was pretty much this candle here. This was some short liquidations. And, you can kind of tell once you kind of know more how the market works, it's a little easier to be able to understand how open interest and, on balance volume and stuff like that interacts with the chart, especially when you're physically looking at this with the actual like limit orders on the screen right in front of the chart. It's really, really helpful. Our next liquidity pool is right around here. You can see some volume coming into the market down here, and we're standing right at around 11,000. 11,000 to 1,100. Basically this little box right here. So this is going to be the area that I'm going to be watching to be reloading on long positions and stuff like that. It wouldn't be too bad of an idea. These guys would obviously get filled first, and then it would slowly start moving down. I tend to stick towards Binance or OKEX. It's just a little easier to understand and to, kind of judge where your positions are. Just because it's a little more organized, like especially Binance here, like, these are very clear levels of buys and sells. You can tell that these are people doing these and not, like algorithms and stuff like that. Like that's the way that a heat map is supposed to look. The way that BitMEX is it looks terrible. So again, we've got this liquidity pool at about 10,700 down here. So I'm on Binance, excuse me. It's a little bit further down, but that makes total sense. It lines up with these bottom wicks. That's where people want to be buying. So if we switch over and we come back to the chart here, where was this level at? About 10,500. So this is pretty much like my buy territory in here, everywhere from 10,600 to 10,450. So that pretty much makes perfect sense, is to start laddering in there. And that's pretty much exactly what we got here on the Binance chart. So I just wanted to go over that real quick with you guys. I hope that you enjoyed the video, and I apologize for not doing content regularly. I promised myself that I wasn't going to be taking long breaks and stuff, but I really need to get out of the house and get to the beach and spend some time with the family and just kind of forget about everything that's going on and get out of the house. We normally only go on one vacation a year, so I'm going to take the opportunity to go ahead and do that, come back fresh, come back clean, and I will probably see you guys on Friday next week. I hope that you guys enjoyed everything. Thanks for following me. Don't forget to smash that like and subscribe button, and I will see you guys next time. Happy trading.